Welcome back. Well, it's a weak day for the market, so let's concentrate on a couple of companies. Medicure is in focus. That stock, in fact, has outperformed, giving returns of around 17% on a month-to-date basis. The company is likely to benefit net from the depreciation of the rupee, as it receives over 65% of its revenue from exports and around 70 to 75% is dollar denominated. Raw material prices too have corrected from highs. To understand what this could mean for the company, we have with us Himanshu Baid, who's the managing director at Medicure, joining in now. Mr. Baid, hi, thank you very much for taking the time out. So overall net, you should probably benefit from the rupee, which is depreciated around 10% plus this year.
Yeah, definitely. I think this correction we were already seeing because some other currencies had depreciated. When you look at Chinese RMB and other emerging market currencies, so I think rupee was bound to depreciate, and I think that is really going to help the company in the long run. And also, as you rightly said, raw material prices have also softened in last 3 to 4 months. I think that is also going to benefit the company.
Can you explain to us the math in terms of how the rupee depreciation would help you? Because we do understand that majority of your exports are dollar denominated, but you are an importer of raw materials as well. So just break up the math for us in terms of how the rupee would in fact benefit Medicure.
So when we net off our imports and exports, so we will have almost our surplus of around $50 million, let's say, when we net off everything. And based on that, I think overall, when we look at the revenue of the company, I think that would be around 40% of the revenue of the company when we net it off. And based on that, I think we would see a 200 to 250 pips of improvement in margin, overall margin of the company.
So 200 to 250 basis points improvement in the company's margins, that's purely on account of Forex. How about raw material prices and freight costs that have begun to correct? Because, I mean, the first quarter margins were sub 19%. In the past, you've done levels upwards of 23, 24% as well. You've given us, a guidance of 24 to 24.5% for FY23. Just wanted a, range for the second half of this year.
So I think the first quarter was also, there was the impact of some M2M losses on investments. And that is the reason the margin went down. But I think now the investments have, become positive also. And also the margins have improved because raw material pricing started correcting in July, August. So we will see more improvement happening in quarter 3 and quarter 4. But from quarter 2 onwards, we are already seeing a positive trend. I can't talk about the numbers right now because we are in a quiet zone, but definitely the numbers will look better.
And what about, growth itself in FY23? Your target earlier was 20%. 16 to 18% was exports. The rest was domestic. Can you give us a sense of whether you're tracking in line with that? Is there an upgrade, downgrade to that guidance that you had provided earlier?
I think the guidance stays where it was in the beginning of the year. We might do slightly better, but 20% plus is definitely on the cards.
And the components as well, export and domestic?
Yeah, so I think when we look at that breakup, I think 1/3 would be domestic and 2/3 will be export. And export actually have grown better in last few months, but I think overall we see exports growing to around 20% plus and domestic market growing to 25% plus.
Okay. I just wanted to get more sense in terms of your domestic business, because we do understand that you've started manufacturing dialysis machines indigenously by the company, and you you placed around 80 in FY22. You're looking to place around 100 this year. How many have you already placed? What is the pricing as compared to MNCs at this point? And what is the capacity that you're functioning at? Just to get a sense in terms of what demand we are seeing from this particular segment for the company.
So till date, we have placed around 140 machines, dialysis machines, till I would say till September of this year. And we see a good traction in the market. We are probably 10% to 12% cheaper right now because the volumes are low. But as the volumes start picking up, I think the economies of scale will kick in. And next year, we target to sell around 500 machines. That's the plan.
Okay. I'm sorry, I didn't get your last guidance in terms of the total numbers of placement of dialysis machines.
So we have placed already 140 plus machines.
Yes, but now.
And next year, we're planning to place around 500 machines. 500.
Okay. And that's on the domestic market. What's taking place with your US business? Currently, it's around sub 2% of sales or just about 2% of sales. But you have, tied up with a distributor in the US. You are waiting for US FDA approvals to come through. You said that there were some delays which had taken place. Where do things stand at this point? When can we see the US FDA come and probably inspect your site or your plants?
So we have applied for the 510(k) approvals for 2 major products, and the final filing will take place in, I think, next 2 to 3 weeks. And we expect that maximum by end of the year, we should have our approvals in place, because these were 2 outstanding queries and which we had to make some new tests on the products based on the new guidelines we got from US FDA. And I think by end of the year, we are very confident that the approval should come through.
And what does that mean then in terms of your revenues? Because I remember you wanting to scale this up to around $10 to $15 million.
Yeah, I think we are looking at, let's say, if you look at 3 to 4 years period, and I think the most important thing what we see right now is not only for the products we have applied for FDA, but also there are new inquiries coming from the US because of this current China Plus One strategy. I think that is a very interesting area we are focusing on right now. And hopefully, the numbers could look very different, but, I'm just keeping a very, let's say, measured outlook. But definitely in 3 to 4 years, we could see $10 to $15 million, even more actually, going forward.
And what about, the PLI that you had? What's the update on the in vitro diagnostics PLI?
So I think we have 2 PLIs. So one is for the dialysis and renal business. So that's ongoing, continuous. We're already investing in that business. And as you know, already we have I've given a guidance for 100 crores for this year for our renal business, which was a new business we started a few years ago, and it's scaling up pretty quickly. In vitro diagnostics also, we have started scaling up. We have added some new products. So totally now we've added around 20 products in that new approval. So again, we are building this business up. I think it will take a few years to build up. But we have made already some commitments for investments of around 50 crores in diagnostic business also in next few years.
Okay. You had, launched a lot of these COVID-related products, for example, antigen tests, etc. Q1, your domestic business just about was, had declined on a Q-on-Q basis simply because of the lack of sales of COVID-19 related products. Where do things stand? Have you completely stopped manufacturing of COVID-19 related products? Are you looking at utilizing those plants for different capacities?
So I think this was primarily scale up of respiratory care products, which were needed during the COVID-19. And I think those products, the demand is completely kind of weaned out. So the plants are pretty flexible. And, I think for us, it was just an opportunity at the time of COVID-19 where we had to fulfill certain commitments to the hospitals and to the government. But after that, I think the demand did taper out. And I think for us, it's good that, the business is more on a steady growth path and we are growing overall in all other areas like infusion and renal. So I think for us, that is more important right now.
Right. Take your point. Just a quick follow-up on that one. You're not sitting on any inventory either, right? To which you had to dispose, etc.
Zero inventory.
Take that point.
All right, Mr. Baid, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Poly Medicure. They do manufacture medical devices. They should net benefit from the rupee depreciation, sticking to growth guidance of around 20% in FY23 and export growth of over 15% as well. Take a short break. We'll get you more on the markets and stock-specific action once we're back. Stay tuned.